Starting a business involves many decisions, and one of the most important is choosing your legal structure. Today, I'll be talking about self-employed versus limited company in the UK. This decision will impact how you run your business, how much tax you pay, and the level of personal risk you take on. Most entrepreneurs in the UK either go down the self-employed route or set up a limited company. In this video, I'll explain the key differences between the two to help you decide which one is the right for your business. Whether you're just starting out or considering a change, this will help you make an informed decision. But if you ever decide to set up a limited company rather than staying a sole trader and you want the process to be as smooth and hassle-free as possible, I highly recommend checking out First Formations. They're the UK's leading company formation agent, trusted by over 1 million businesses since 2014. And they can get your company registered in as little as 24 hours. And they offer services like business address options and compliance support. They are experts when it comes to UK company registration, so you can rest assured your business will be in safe hands. You'll find the link to their website in the description of this video. It's an affiliate link, which means I'll earn a small commission if you use it at no extra cost to you. This helps me to support my channel. Thank you. Now let's dive into the details. Step 1. What's the difference between being self-employed and a limited company? Let's break it down. When you're self-employed, you and your business are essentially the same entity. You're in charge of everything, which also gives you complete control, but it also means you take all the responsibility. Being self-employed, also known as sole trader, means there's no legal distinction between you and your business. So, if your business runs into financial difficulties, your personal assets, like your home or savings, could be at risk. This is what we call unlimited liability. And in short, you're personally responsible for any debts your business incurs. As a sole trader, you've got a few key responsibilities. First, you need to register for self-assessment with His Majesty's Revenue and Customs, so you can file your taxes. You need to keep accurate records of your business's sales and expenses. If your turnover exceeds threshold, which is currently £90,000, you'll need to register for VAT. Note that there are exceptions which require you to register for VAT regardless of taxable turnover, such as if you're based outside the UK, your business is based outside the UK, you supply any goods or services to the UK. And don't forget about your business name. HMRC has rules about what you can and can't call your business, so make sure your chosen name complies. Now, how does this compare to running a limited company? A limited company is a separate legal entity from you, the owner. That means that company's debts are its own, not yours personally. If the business runs into financial trouble, your personal assets are protected, which is why it's called limited liability. This separation offers more protection and is one of the main reasons why many business owners opt to form a limited company, especially if they are in higher risk industry. However, running a limited company comes with more administrative tasks. You'll need to register your business with the Companies House, file annual accounts, and you need to submit a confirmation statement and stay on top of corporation tax returns and possible VAT registration, to give a few examples. It's more paperwork, but for some, the peace of mind that comes with limited liability is well worth it. So, which setup is the right for you? It all depends on how much control, responsibility, and risk you're comfortable with. Do you want the simplicity of being self-employed, or are you ready to take on more responsibilities and protections of running a limited company? Step 2. How does tax work for self-employed versus limited companies? Let's be honest, taxes can feel overwhelming, but there's something every business owner has to deal with. So, how do taxes differ between being self-employed and running a limited company? Let's break it down. If you're self-employed, you'll pay income tax on your profits. This is handled through a system called self-assessment, where you report your income and expenses to HMRC each year. In addition to income tax, you'll most likely have to pay national insurance, both Class 2 and Class 4, depending on how much you earn. The standard personal allowance is £12,570, which is the amount of income you do not have to pay tax on. If you have the standard personal allowance for income between that lower limit and £50,270, you pay 20% in tax. If you earn between £50,271 and £150,000, the rate jumps to 40%. And if you're successful enough to earn over £150,000, you'll pay 45% of the taxes. Note that income tax bands are different if you live in Scotland. Also note that there are exceptions to the standard way, and I recommend consulting professionals if needed. Now, if you run a limited company, things are a bit different. The company itself pays corporation tax on its profits, which is currently set at 25%. If your company made a profit of £50,000 or less, you'll pay the small profits rate, which is currently 19%. And you may be entitled to marginal relief if your profits were between £50,000 and £250,000. As a director, you can pay yourself a salary, which is taxed through pay as you earn, like any other employee. You can also take some of your earnings as dividends, which are taxed at a different rate than income. This setup gives you more flexibility in how you take your earnings and can often be more tax efficient. But note that the numbers I provided in this video are from September 2024. Make sure to check the most up-to-date numbers from the government website. So the question is, do you want to keep things simple, or are you ready to explore the tax advantages of a limited company? It all comes down to how much you are earning and how much time you're willing to spend on tax planning. Step number 3. Who's responsible for business debts? Here's an important question. If things go wrong, who's responsible for the business debts? This is one of the most significant differences between being self-employed and running a limited company. When you're self-employed, you're personally responsible for any debts your business incurs. If your business hits a rough patch and you can't pay the bills, creditors can come after your personal assets, like your savings, car, or even your home. This is because legally there's no difference between you and your business. It's called unlimited liability, and it's one of the biggest risks of being self-employed. With a limited company, however, the situation is different. The company is responsible for its debts, not you personally. This is known as limited liability, and if the business goes under, the most you'll lose is what you've invested in the company. Your personal assets remain protected. This makes running a limited company a much safer option if your business comes with significant financial risks. So, how much personal risk are you comfortable with? If you're a freelancer or running a small business with minimal risk, self-employment might be fine. But if you're in a riskier industry or planning to grow, the added protection of a limited company could give you peace of mind. Step 4. How much paperwork do you want to deal with? Nobody really enjoys paperwork, but the amount you'll need to handle depends on your business structure. One of the big advantages of being self-employed is that there's less paperwork involved. You need to keep on track of your income, expenses, and file a self-assessment tax return once a year. If you're VAT registered, you also need to file VAT returns, but overall, the admin side is fairly simple. Running a limited company, on the other hand, comes with more responsibilities. Like what I mentioned earlier, you'll need to register your company with Companies House, file annual accounts, confirmation statement, and corporation tax returns. And don't forget, your company's information, like who the directors are and the company's financial health, is made public, which might not appeal to everyone. Because of these extra responsibilities, many limited companies hire an accountant to handle the admin side of things. While this adds to your business costs, it also means you can focus on running your business while someone else manages the paperwork. So, do you want to keep things simple and manage the admin yourself, or are you ready to bring in professional help and deal with the extra admin that comes with running a limited company? Step 5. Which option is better for your earnings and growth? How do you plan to take money out of your business? And do you see your business growing in the future? These are crucial questions when deciding between being self-employed and forming a limited company. As a sole trader, any profit you make is yours. You can withdraw it whenever you like, but you'll pay tax on all the profits, whether you take the money out or leave it in the business. This can limit how easily you can reinvest in your business. Plus, sole traders often find it harder to get loans or attract investors, as there's no formal structure that investors can buy into. Limited companies, however, offer more flexibility when it comes to earnings and growth. You can pay yourself a salary or take dividends, which can help reduce your tax bill. And if you need more capital to grow, you can sell shares in the company to raise funds. Investors are often more comfortable putting their money into limited company because it has clear legal structure and their risk is limited to their investment. So, if you're planning to stay small and keep things simple, self-employment could be the best fit. But if you're looking to grow your business and attract investment, a limited company might be the way to go. Step 6. Which structure suits your business? So, which structure is best for your business? It depends on the kind of business you're running, how much risk you're willing to take, and your long-term goals. Self-employment is ideal for freelancers, contractors, or anyone running a small business on their own. If you're just starting up, it's easy to set up, simple to manage, and involves less paperwork. Plus, you get to keep all your profits. However, you do take on more personal risk and you might find it harder to grow and take time off. A limited company, on the other hand, offers more protection and flexibility when it comes to paying yourself and expanding your business. It's a great option if you're planning to hire staff, attract investors, or take on larger projects. While it does come with more responsibilities like filing accounts and managing taxes, the benefits can outweigh the downsides if your business is ready to grow. So, what's your next move? Whether you choose to remain self-employed or set up a limited company, the key is to pick the structure that best fits your business goals and personal situation. If you still feel uncertain and feel like you would need some more information, check the step-by-step guides provided by the government for both business structures to help you with the decision. I've linked both of them to the description of this video. And remember, if you decide to form a limited company and want the setup process to be smooth and easy, I recommend using First Formations. They're experts in company registration and will help you with the complexities of setting up a limited company. I hope this video was helpful and I wish you the best luck with your business journey. Bye bye!